XRP's getting the pump from some Bitcoin ETF action. Ripple's out there saying, you know what, we love XRP, but we're not maximalists. There's use cases for other crypto. Liquidity hub. And the yield, yep, the 10-year yield is starting to rear its ugly head. Starting it off with your comments. Yoki J says, it's been a boring morning. I needed a vid. That definitely gets a like. Frankie Ortiz says, first like always. Well done, Frankie Ortiz. Frankie's been first like quite a bit recently. Anyone going to take Frankie down and become in first? Bitcoin's sitting at 31,029. Sailor Nuts AF, but in the green by quite a bit. ETH 1692, still no love. XRP though, pumping on the news. Check it out, 2.25, 53.3. We're going to talk XRP big. Bitcoin blast past 31,000 as optimism for BTC spot ETF action happens. Oh man. This Bitcoin ETF action, let's just hope this just isn't some big, like, pump and dump. It's all we're hearing about. BlackRocks, Grayscales, all these ETFs coming out. Buy the rumor, sell the news, or is this really going to propel crypto to staying in the green? Will this green streak continue? The yield on a 10-year reached 5% for the first time in 2007. Here's why it matters. All right. So you got some BTC good news over here, but you got some 10-year yield over here saying, yo, you guys need to check your shit out because got some problems brewing. Treasury yields have been climbing rapidly, with the 10-year yield rallying from less than 3.5% during the spring from just 0.5% earlier in the pandemic. Wow. The yield for the 10-year Treasury was hitting 4.96 after hitting 5% earlier. The jump means the U.S. government must pay more to borrow money from investors to cover its spending. It also directly affects people around the world because the 10-year Treasury yield is the centerpiece of the global financial system and helps set prices for all kinds of loans of investments. Besides making it more expensive for U.S. buyers to buy a house with a mortgage, higher yields also put downward pressure on everything from stocks to cryptocurrencies. Eventually, they could help cause companies to lay off more workers. Why? Just stuff becomes more expensive. So if now the government is paying more money to borrow, and the government's money printer go burn, it's not just the U.S. government, everyone. This is governments all across the globe. You're going to have a big problem. When the super safe treasury is paying much more in interest, investors feel less need to pay high prices for big tech stocks, crypto, or other investments that carry more risk. As always, any article you see in this video will be linked in the description below. It's a big reason the S&P 500 has seen its gain for the last year so far tumble almost 20% at the end of July to 10% as of Friday. Wow. Higher U.S. yields also attract more investments from abroad, which gives the dollar some pop, especially against other currencies. So you got the 10-year over here kind of getting, let's draw on some attention here, not the best. Because again, safe haven asset play. You don't want to get into crypto if you got the 10-year juicy yields. 10-year yields at 5%, that's pretty juicy here. That's some juicy material. People could put some money into there thinking, I'll get 5% and not have to worry about any of the rest. Ripple CEO reveals they're not XRP maxis. They're not sailors. There's something else. What's the catch? Well, they can't be maxis, and here's Brad to explain why. We own a lot of XRP, and we think XRP is extremely efficient for many use cases. Not all use cases. We're definitely not maximalists. We think there's a place for Bitcoin. There's a place for a lot of other tokens and different use cases, Brad stated. It's important to note that Ripple does not hold a maximum view. Why? Because it supports Bitcoin, Ethereum, stablecoins, USDT, USDC on its Liquidity Hub project. No, it does not have XRP on its Liquidity Hub project. Even though what, everyone? Secondary sales are protected. XRP is in the green, getting a pump from the BTC ETF and Snoop DRDGOLD, who hangs out in the LBC. Not LBRY. They have been shut down by the SEC permanently. But the pop here, you can see, is this ETF optimism is stronger than the 10-year yield. Why? Because some of us are thinking, hey, that 10-year yield is going to start eroding. If that erodes and you get more positive BTC ETF pressure, that could outweigh the negativity of, yes, the 10-year. So what is the play looking like going forward? Well, you've got some debt crisis action going on too, so we have to be very careful of that. We're also going into the end of this month right here, beginning of next month, November 1st, Jerome Powell rate hike. See where I got the cross up on the screen right here? That's rate hike decision. Expected to take a pause. I mean, like, money is on the table. Like, take a pause. It's going to happen. So, with some green events here in the short term, we could get some relief. Now we just have to be cautious, though. Why? Mid-November, debt ceiling bullshit starts all over again. More negative price action. Why? U.S. economy, maybe not so stable. Maybe U.S. default risk. And then you have to pay even more for debt. And then all of a sudden, yeah, assets that are risky like crypto, people don't want to put their money in because then the yields would get higher for other safer assets out there. But short term, we'll take this. ETF pump will definitely take it. Will the approval lead to more permanent green candlesticks, or will it just be another pump and dump? Sooner or later, the 10-year will adjust, and I think a lot of us out there are wondering where that next play is going to be. Been watching the prices of gold, the prices of oil, safe haven assets, weighing positive news like Bitcoin ETF action pumping up the market. Hey, it's cool, man. If Bitcoin can pump up the market, then we like Bitcoin. Just like Brad. Brad likes Bitcoin, and so does Ripple because they use it in their liquidity hub. XRP isn't used, but not really too worried about that. They're not maximalists. They see use cases for different things. Now, the green candlesticks that we have obviously have been stronger here over the last 5 days compared to the red negatory action that we've been feeling. We might get a break here of a few weeks, or we might go right back into the red if we don't get any good news here out of the Middle East. Why? Because latest reports have things ramping up even further, which makes the safe haven asset play even bigger. And as I just showed you in those previous articles, which are all linked in the description below, this is a news channel, that as that global turmoil turns up, as the amount it costs to borrow money goes up, the yields to back those things are going to go up. Those yields then will attract more money to the safe haven play, along with gold, along with oil. So we got to be very careful here. Because yes, we're seeing some positivity. I'm looking at XRP right now at 53.3. But I'm also looking at some news events a few weeks out there that are making me think, you know, if I could take some profits here and play on that next move, good 15%er wouldn't be so bad. I'm not telling you to do that. I'm just telling you how I look at the market when I digest this news. What are you doing today? Let me know in the comments down below. Recovery Day electrolyte drink mix along with branched chain amino acids. Watermelon flavor. I'll catch you cool cats later as more news breaks.